What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our market open live stream here as the markets are dumping right now pre-market. We are seeing a little bit of selling pressure as S&P 500's down almost 0.5% after 2 days of consistently selling off, and we got the Nasdaq 100 also down quite aggressively, almost 70 basis points here, now trading down to $592 as Nvidia is back under 175. Tesla also rolling over, down over 2%, not to mention a lot of other individual stocks including Palantir down over 3.3%. SoFi also selling off a little bit over 3.5%, and we folks have something on our hands as volatility is also pushing higher, up over 6%, getting back up to over 17. So I'm going to break down a lot of individual stocks in this market update. I'm going to try to cover as many as possible for all of you. And of course, get ready. Because this is starting to look a little bit interesting here as S&P 500, of course, gave us those two back-to-back red days, showing us some more potential weakness pre-market, not to mention the Nasdaq 100 and the Nasdaq Composite, all of these also posting in back-to-back losses here. And again, we're only really down over 1% from all-time highs. So if you come over to the market snapshot, this right here, of course, is what yesterday looked like from the market's perspective. A lot of liquidity flooding out of technology names: Apple, Google, Oracle, Nvidia, Amazon. A lot of these stocks were selling off. And of course, we did see a lot of that liquidity go towards consumer cyclicals, consumer defensives, energy, utilities. Those were some of the winning sectors. But if you scroll down a little bit further, you'll notice that we are down anywhere from 1 to 1.5% to as much as 2% for some indices from all-time highs. We're starting to see a little bit of a profit taking, some dip and some pullbacks in this market, as towards the end of September has also been, during that time, the worst time from a seasonality perspective for the market as well. So thank you so much for joining, everyone. Welcome on board, everyone. Good morning. And I literally have just been knocked out ever since I got home last night. I slept a little bit, obviously, during the night, but it was the evening over in the US. And then I woke up a little bit at 6 in the morning. And then when it was at 1 a.m. in New York, I was like completely out. I was like knocked out for the last 6 hours without realizing what time it was, and woke up at like 3 p.m., had a little bit to eat, and here we are. Now I'm live. So yes, it was a lot of resting because didn't really get to sleep a lot on the plane. It was a red eye, and for some reason I've just never done well with the red eye flights. I always struggle to sleep. In the plane, doesn't matter, where or how long the flight is. But if it's a red eye, then yes, I definitely do struggle quite a bit. Let's take a look at crypto as well. So crypto also has been selling off here, down over 1.77% for Bitcoin, trading back down to 111,000. And we've also got Ethereum that is selling off a little bit here. It is, let's just quickly go over to Ethereum. Here we go. So that's going to be Ethereum US dollar down 4,000. So 4,000 points. That's where we currently are for Ethereum right now, selling off another 3.7%. So crypto most certainly is seeing a little bit of liquidation right now. And we talked about this yesterday, right? We talked a little bit about this in our previous market update, where we are seeing a risk-off environment in this market where technology, crypto, a lot of those risk-on trades that have been working out for us for such a long time are starting to see that pullback in the markets right now. So this is, again, a very, very normal, healthy dip. The volatility is up over 7%, so back up to over 17. Again, we talked about how volatility is pretty low. MoneyVest Index remains in optimism. Market technicals are very, very stretched, very overbought. As you can clearly see, the RSI, the MACD was trading at well over 65 to as much as 70 for the RSI on the S&P 500, and we're now starting to see a little bit of a pullback as well. So, Ricardo, good morning from Portugal. Good morning to you too. Thank you so much for joining. Good morning, money investors. Hope you got a little rest, Karthik. Yes, got a little bit, 6 to 7 hours, not too bad. Can we expect a stock split for Palantir next year? It is possible, obviously, given how high it's trading. It depends completely on the board. And I don't think Palantir's ever done a stock split ever before, because this has been just on a insane run up to new all-time highs. And from $5, $7, this thing is up over 3,000% or 30 times from 2022, which is just an insane rally. And so, yes, it is possible, again, at the complete discretion of the board as well. Crypto isn't looking too good. Yep, we just went over Bitcoin, Ethereum, both of them selling off here. Ron, love this market open live streams. Thank you. Appreciate that. Thank you so much for joining. Ryan, business class, premium econ in your economy. So I do fly, well, I guess depends on the flight, the time, and a lot of different factors. But this was a business class. It was Q Suites with Qatar Airways. Absolutely incredible. Loved it. But again, it's just red eyes. I always have a hard time kind of sleeping during those red-eye flights. But yes, overall, the experience was amazing. Qatar Airways is incredible. I had a very short layover in Doha, then, of course, another 15-minute flight to Dubai. So just got back last night. And yeah, just been dealing with the jet lag over the last, I guess, 12 hours, 14 hours. Is Lamb Research a good buy today for a swing trade? Let's talk about those, right? Let's talk a lot about these stocks and these companies. All I'm asking in return from all of you is share this video, share this live stream with as many people as you can. Other traders, investors who want to join, be a part of our, live stream here and talk a little bit about the markets. We'll take a look at a lot of these stocks, including a lot of these retail favorites, including CoreWeave. We got Oscar. We got Open Door, Grab, BMNR that's been selling off a little bit, down over 6% now, trading down to $48. $47 is going to be that next support for BMNR. So that's really what I'm watching very closely for BMNR. That's going to be that level of support. And of course, we got Oklo down over 8% yesterday. We got Rocket Lab Corporation down almost 8%. CCJ, DLO, ETHZ, a lot of these sort of momentum retail favorites are starting to see this selling pressure come in. So Janinder, join the community soon. Definitely join. I would really appreciate that. And yes, we're all here to help. That's the whole essence of the community, is to help each other, learn from each other, and grow together. And it's my life's goal to get to meet every single person. That's why I do a lot of these trips, so I can meet everyone that is a part of our MoneyVest community. Go and get to know you better, because right now it's just you guys already see me, but I can't really engage with who it is that I'm talking to. So putting a face to the name is so important for us to build this community even more. Anyway, so markets obviously not looking great right now. We got the S&P 500 down over 0.5%. QQ's down over 76 basis points. Everything seems to be rolling over a little bit here. Palantir's down 3%. SoFi is down 4.2%. Nvidia is down over 1.3%. And Tesla also rolling over a little bit over 2%. At the moment, the 10-year treasuries right now are pushing higher. We're seeing a little bit of that momentum for the 10-year yields, getting up to almost 4.2%. From its lows of 4%, we are seeing a little bit of a push back up to 4.6%. And TLT is indeed struggling. It's also down over 39 basis points right now as well. So, excuse me. What's interesting is that you've got crypto selling, you've got equities selling, you've got the bond market selling, you've got gold and silver also selling off. It's sitting at just over 3,700, and you've got silver also. Silver is the only one that's actually up, trading at a new 52-week high at over $45 per ounce. But crypto, gold, we got equities, and we got the bond market. 4 of the most important asset classes, all of them rolling over a little bit. They're all starting to sell off. Well, what does that tell us? Investors starting to get a little bit more defensive at the moment. And where could the money be flooding to? Possibly cash or other sectors that are indeed pushing higher, right? So consumer defensives were higher. Energy has been higher over the last few days, as well as staples, utilities. Those are some of the parts of the market that are indeed doing much better than, of course, some of the risk-on sectors. Okay, let's talk a little bit about some individual stocks. Lamb Research is what we're going to... No, that's not Lamb Research. That is LAC. That is going to be Lithium Americas. So this is what this stock is. Very, very low market cap, about $1.5 billion. But, of course, pre-market up another 12% after being up over 95% yesterday. So just got to be extremely careful with these kind of run-ups here. As you can see that this is an insane volume breakout, and the target and the resistance I would watch for is 761. So that is what I would put down for LAC. That would be the level to watch for this stock moving forward right now. Hey Karthik, any thoughts on SentinelOne? December earnings will be 4 consecutive quarters of profitability. So Joel, we'll take a look at that here in just a minute. RGTI will also take a look at. Smiley, hi from Athens. Thank you so much for joining. And then we'll take a look at Caterpillar as well. So again, keep putting in those stickers, and I will do my best to cover as many as possible. And this, I feel, is part of the YouTube or the retail trader list. We're seeing a very, very nice sort of rebound from its lows of around 550 or $7 here. Very strong support. And of course, this has been on an insane run up here, up over 359% on the daily time frame. It is incredibly overbought. I mean, I would be very, very careful. And look, this is quite literally the state of the market right now. There's a lot of technicals that are stretched to the upside that are incredibly overbought. The RSI, the MACD, the L3 banker oscillator, everything is stretched for a lot of these names, including RGTI, which of course is coming up to its resistance of $34, $35, and that is exactly what I would watch for, all the way down to a support that's going to be sitting at around this $21 to $22 level for this stock here. This right here, there is going to be that support. Previous resistance acting as a new support here. And given how overbought and overextended we are, I would not be surprised to see that. Okay, going over to, let's see, SentinelOne. What is the S? S is the ticker symbol here. A lot of consolidation sideways. So this is essentially a range-bound pattern for this stock. You can see that we're getting rejected here at this resistance support level right about here. And of course, it's just been trading sideways in that range for a long time. So I would put down a support roughly at $17 with a very important resistance all the way up to as much as $19 for SentinelOne. So right now, we're just kind of trading in that range for the stock, moving sideways, right? So support level 17, resistance getting rejected around $19. And yes, it's actually on its way to profitability very nicely. But I'm not sure where you're seeing 4 consecutive quarters of profitability, because the last several quarters we have seen losses for the stock. Let me just quickly go over to our platform and see what that looks like. So ticker symbol S for this one. We're going to come over to fundamental analysis, and we're just going to go over to quarterly, last, let's say 12 quarters, and we're going to come over to gross profit and bottom line profit as well. Yeah, I mean, gross profit has been growing, which is good, but net losses have also been pretty stable at around 60 to 70 million. Which is kind of consistent with what I'm seeing on TradingView. So yeah, not really seeing a lot of profitability right now for this stock here. Okay, let's take a look at Caterpillar for Chente. And again, guys, more and more people joining us. Thank you so much for being here. But I want this to be useful for you. I want this time that we share together during our morning live streams to be valuable for you. So any questions, just let me know. Fundamentals, technicals, stock related, macroeconomics, Federal Reserve policy, monetary policy. I'm more than happy to cover as many things as possible, because I want to use every single minute of our live stream answering questions, so you're getting the help that you actually need. Okay, Caterpillar trading at an all-time high. RSI, MACD, L3 banker oscillator, all these technical indicators suggesting for pretty extended run up here. And I would put down a decent support for Caterpillar right around here at 440 in case we get some kind of a pullback. Again, a lot of these are not a question of if it's going to pull back. It's a question of when it's going to pull back, right? Because once we get to overbought levels, stocks most certainly start to roll over eventually, right? We just don't know when, but they do. And so for Caterpillar, keep a close eye at 440 all the way down to as low as 407. That's going to be another really important, really strong support there for this stock. And resistance is going to stay put at 485. That's pretty much the all-time high for Caterpillar. So that is going to be that resistance with a support down at 440, pre-market down over 1.5% at the moment. So coming over to APLD and then QQQs as well. So APLD, we have talked about this stock many times. As you can clearly see, this is the entire technical sort of analysis. And I would consider this as a very strong below the top off rally where it became overbought, it became overextended. And again, to my point earlier, that this is not a question of if, it's a question of when it's going to pull back. And eventually it did. You can see APLD essentially dropped a little bit over 40%, coming back down within that channel of higher highs and higher lows. And then, of course, then recovering back higher to new all-time highs, or not quite all-time highs, but getting up to 52-week highs. And right now, once again, it's at the top of that channel, 6% lower pre-market, and I would put down a support at $18. So $18 is going to be that support for APLD. That's going to be right there. It's at the confluence of this higher low. That's the uptrend, as well as a previous resistance potentially acting as a new support as well. Dustin, I've been watching Caddy since he was broke. He's the man. Oh my God. That's crazy. So how long has it been? I really want to know. How long has it been since I was broke? Yeah, so that's crazy. A crazy comment. Okay, let's come take a look at up here, QQQs and OPE. I don't know what that stock is. So Open Door, is that what you mean? Tai, is that the stock that you're referring to? OPE, is it Open Door? But let's just take a look at QQQs here. So QQQs, I mean, NASDAQ 100, pre-market down over 73 basis points. Again, we're coming off of some pretty overbought and extended technicals here. And resistance 583 to as much as 575. Support level all the way down to as low as 555 here is going to be pretty reasonable support. For QQQs, it's going to be an 8% correction, or 8% pullback, I should say, or any kind of previous resistance acting as a decent support at 583 for QQQs as well. ASML, I really, really like. I think ASML is one of the most fantastic companies. It's part of the portfolio through an ETF, SMH. SMH is something that I'm really bullish on. I've been dollar cost averaging into this for a long time. It's been hitting all-time highs after all-time highs. Pre-market, of course, selling off a little bit as the entire market is. But ASML, we've got a support level at 845, down to as low as 786 for this company. It's also part of the shopping list with my buy targets also included. Okay, EPS growth. EPS growth also, I don't think they have that, SentinelOne, because I'm not seeing earnings per share growth for the business either, unless you mean that this earnings growth is what is going to be kind of, in the future in 2025 and 2026, 19 cents per share, then 32 cents per share, then 46 cents per share. Yes, it's expected to become profitable on an earnings per share basis over the next 3 years, which certainly when a company is becoming profitable, that is great news for any kind of business, right? That's always good from a Wall Street perspective as well. Lambert, hi. What is your thoughts on Skina Resources, and what about Tesla? Should I wait for a bigger dip to invest? Let's take a look at what this Skina Resources is. SKE. Wow, incredible chart, and seems to be on a very, very nice consistent uptrend. Market cap is $2 billion, so not bad from its lows on February 2024. The stock was at $3. It is now up almost 500%. And this right here is the higher lows that I would put down for this stock here, and this would be the higher highs within which it's been trading very nicely. So if you're looking for a decent entry, again, I have to look at the valuations as well, make sure the fundamentals line up, but support level is going to stay put at 1450 for this, kind of aligned with this higher low, as well as this previous horizontal support. If we do break down further, next target is going to be closer to $12 for this stock. Nonetheless, SQQQs, I would be very careful with any kind of short positions because if there's a trend, if there's a pattern that looks like this, I want to be farther away from it because it is very, very difficult to actually try to time any kind of these dips. And that's really what I want most traders and most investors to take away from technical analysis, is that one of the most important things we're trying to analyze also is the trend, is the overall trend for that stock or that company. Because you can always correlate that to your own portfolio's growth, right? Do you really want your portfolio line to look like this? Or would you want your portfolio line to look more something like this, right? This is what all of us want. We want a ascending line. We want something that goes from the bottom left of our screen to the top right. We want something to actually grow, as opposed to something like this, which is going to make our lives a nightmare. It's going to make very, very stressful. And so once you kind of identify these trends, you already understand the odds of you making money on a long trade is really, really low. It is almost impossible to time those trades. But when SPX comes in, if you take a look at this is the S&P 500. And again, you can take a look at the overall trend here. It's been consistently moving up. So what is better, to be long or to short on the S&P 500? What is statistically better? And I know a lot of people that they take short positions on the S&P in hopes that the market's going to correct, in hopes that the markets are going to tank. And that obviously becomes a very, very low probability trade. It becomes a more stressful position to manage. And so my philosophy has been very, very simple, is that I always want to be a net long investor, net long trader. I always want to bet on the markets going higher. That, in a nutshell, is what it is, while also being prepared for when we do get those dips and those corrections and those bear markets, because we will get them, right? It's not going to be the absence of those at all. We are going to get them. It's just that I'm always prepared for it. And my preparation is not through buying puts or shorting the market. My preparation is through increasing my cash exposure so I can, once again, double down, triple down, and be more aggressive on my long positions when we get those dips and corrections. So hopefully that gives you a little bit of an idea on that, and gives you an idea on how I sort of approach the markets there. Okay, Rajat, what are your opinions on covered calls for passive income? Lately, everyone is jumping on those funds. The only thing is that just be a little bit more careful, because they obviously do trade covered calls on a lot of high beta names. And if the market takes a dip, then yes, that positions are also going to come down. And then the expense ratios and the fees are pretty high. I think for any kind of covered call strategy, that's something that you can essentially do yourself if you've got the proper education and the training and you understand how to do them. So I've basically been running an options portfolio that's been doing pretty well, knock on wood, for the year, and of course for the last couple of years as well. So I do very much like covered calls in a very specific options trading portfolio, but just got to be careful and understanding of the fact that, okay, it's not always profitable. It's not always fun to do them. Sometimes you're also going to kind of get into these market environments where we start to sell off, like is what we're witnessing pre-market right now. And covered calls act as a hedge against those long positions as well. Is now a good time to start selling puts or still waiting? Thinking about selling $25 puts on SoFi. I would wait a little bit longer, just given that, you can't even tell on a weekly time frame that this is actually a pullback. You can kind of see that the red candle is starting to form, but we're still at all-time highs. I mean, this is, again, in the grand scheme of things, this is actually quite nothing from a pullback perspective. And we keep joking about this in our Discord, that this market has spoiled us. It quite literally has spoiled us because of all the easy money going around, that we start to forget what an actual correction or a pullback actually looks like. A 1% dip and everybody starts to lose their mind, which is nothing, which is absolutely nothing. I mean, 1%, compared to what we are used to seeing, is nothing. So I would wait. I would be patient. It's really about fluctuating with those cash exposures and making sure that you're ready and prepared for in case we get a bigger drop in the market. So, okay, Dustin, like 2018 or 2019, your account was like 20K, I think. Okay, that's great. Thank you so much for definitely following along for such a long time. I really appreciate that. And yeah, I've been 2018 is when I started creating content on YouTube, but it wasn't until COVID when I actually started to kind of do this more actively and more on a, more full-time basis, even though I was, of course, working and everything. But 2021 is kind of like the official journey that actually began for MoneyVest. But yeah, 2018, I was creating content every now and then, once every few weeks. But yeah, it's been insane. Mike says, don't know about broke, but we've been watching him back before he could grow the beard. I know, I could always grow the beard. I just never wanted to be honest. I just never thought that it would look good. But one of my closest friends, he convinced me. He was like, what, just see it all the way through, right? Just see it this time, like, do it. And I was like, okay, if you say so. And then yeah, rest is all history. So I kind of kept it. It looked nice, and I kept it. So anyway, ticker symbol O, and then we'll take a look at Intel as well, and then Poet, Poet. So Poet Technologies. Let's take a look at the market cap first. About half a billion, 548 million. So again, a very, very small cap name here. Resistance is going to stay roughly around 770, with a very strong support at 350 right now for Poet. And there's a little bit of support right about here for this stock at 485, closer to 490 for this stock as well. Let's take a look at BMNR. We'll talk about that here in just a minute. I'm just going to answer some questions very quickly. Can you please add Oracle in your daily analysis videos? Everyone is talking about Palantir split next year. What are your predictions on the stock performance after the split plus 400 more shares of PayPal? Yes, PayPal, as I already mentioned, I am out of that stock. I like the company, no doubt, but I do think the opportunity cost was what's resulted in me kind of exiting out of my position, of course, reinvesting it elsewhere. Palantir, I think the split is the more obvious choice here, given how high it's now trading at, 174, 175, and I think it's going to open the doors for more options activity as well. And yes, Oracle, we will definitely add it to the daily analysis and the daily market updates as well, given that's also part of the shopping list for us for a long time. Is it good to buy VUG or wait a little bit longer? For any kind of ETFs and index funds, I don't think waiting is the right thing. You just want to be invested. Again, time in the market is going to be far better than trying to time the market. And so, with that regard, I think VUG is one of my favorites, and I will continue to dollar cost average into this every chance I get. Long-term, growth-oriented, tech-focused ETF that I'm more than happy to hold through my investing journey. So I think waiting, you can be a lot more aggressive in case we get a bigger pullback. But if you've got the cash and you are kind of dedicating that towards dollar cost averaging into a ETF or an index fund, which is low cost, then I don't think waiting is the right decision. Just my 2 cents. Because I have bought at the worst possible times on purpose for these Vanguard funds. Like, this was an experiment that I was doing for, last 2 to 3 years. Is like, I wanted to buy at the worst possible times when the markets are overbought, when we're trading at a premium valuation, when we are overextended, when we are kind of getting that feeling of this overheated market. And I was buying Vanguard ETF, VUG. And even then, it turned out well. It turned out just fine. So that was an experiment that I wanted to do, kind of see, is it better to kind of try to time the market or just put the money in and let the market do its thing? Okay, let's take a look. Recall 2022, so remember the bear market. That was a good lesson. Yes, that was crazy, definitely. Yeah, Caddy with the green mic. No, we had the red mic. Red mic was, and I'm going to probably introduce the red mic again in 2022. I'm definitely thinking about it because I think the red mic spirits are definitely calling for it. 3 consecutive strong years for the market. I mean, how long can this really go on for? I mean, So we gotta be careful and prepared for 2026, which is also on the Benner cycle, by the way. Okay, would you be a buyer of Open Door? It's ran up too much. I mean, this is still, I would say. And we're getting some of the early signs of a little bit of a pullback on Open Door here. And let's take a look at here. And again, on a weekly time frame, it doesn't look very good. I mean, even on a monthly time frame, it's starting to look pretty brutal from a technical analysis standpoint. So we're just getting some of those sell signals come in for Open Door. So I'd be very careful here. BMNR 47 bucks is going to be that next support to watch for Bitmine. So that is going to be that next level at around $47. And right now, resistance is going to stay put at 51, 52 bucks. And since Ethereum is selling off quite aggressively, so is BMNR, so is a lot of crypto stocks right now pre-market, which again is very, very normal. Let's take a look at InMode. So INMD. So InMode, again, Israeli company, consolidating sideways quite a bit. Support level is going to stay put at 1370, 1350 here. A lot of consolidation in that range. It seems to be struggling quite extensively here at this resistance, finding a very strong support here at $13.50, $14 range, but it's really been bouncing around in this range here. So if you do get a breakout above this $15.50 level, next target is going to be all the way up to 17 bucks for InMode. So those right there are going to be some levels to watch. Okay, let's see. Why is the market so bad right now? Well, it has been so good for such a long time. So this is a very, very normal and a healthy pullback, I would say, for the market. So, S&P is down 0.5%, QQQ is down 73 basis points. I mean, that is almost next to nothing because we've seen worse. We've seen much worse than this. Amir, what job were you working before you started YouTube full time? So I was in corporate finance, working for a construction company in Boston, in Woburn. So in basically Massachusetts, just 15 to 20 minutes outside of Boston. So I did that for a couple of years before I decided to just quit my job and yeah, leave in pursuit of greatness with MoneyVest. So yeah, I mean, I love what I do, to be honest, and I would not change anything for what we have now. The community that we have is absolutely incredible, great people, and it's the best. Okay, I'm gonna try to get again as many questions as possible. BMNR we went over, in mode we went over, Costco we go over that blob in our market updates. So definitely do check that out. I'm looking for some newer ideas as well. Advanced micro devices also gone over that in my yesterday's market update. So definitely do check that out if you have the time. So Vane already covered that. The U.S. has deployed jets against Russian bombers. Russian military aircraft have been detected in Alaska's airspace. Could be the dump for right now. Yeah, I mean, you can attach a lot of the catalyst with the market technicals and what the markets are actually doing, but at the end of the day, like, given how extreme of this rally was, we've been talking about this on Discord and in the market updates for a long time, is that valuation. You look at the market multiples, 25.5, right, on a 2025 basis. Volatility, sitting in the low 16s, even low 15s, really, really low numbers, looking down to 25 to 30 percentiles for the VIX. MoneyVest Index, right, optimistic zones. Market breadth continues to be a little bit more sort of not quite elevated, but it is higher, compared to where I would like it to be from a buyer perspective. And the market technicals in general, RSI 98th percentile, very rare. Technicals were stretched to the upside. A lot of individual stocks, including the likes of technology and growth and crypto. Everything was just ripping higher on the back of this 25 basis point cut from the Federal Reserve, which obviously added more fuel to the fire. And it's going to be more of them, right? A couple more rate cuts coming in. So this is very normal. And also when you consider that we are going into the last few trading days of September, which historically is the worst time seasonality-wise for the entire year. It's not just September as a whole, but especially towards the last 7 to 8 trading days, which is when the selling pressure begins. I mean, there's a lot that's kind of coinciding together, which could lead to a market that looks like this, pre-market, where we are selling off. Now, after the market opens, we could see some buyers step in. That could happen, obviously. But I'm still, with some cash ready to deploy capital. Not too much, 10 to 12% is what I have. Still 85, 90% invested in the market. So obviously any kind of pullback is going to hurt investors everywhere. But it's also who's prepared is going to take the most advantage of these sell-offs and, of course, these red days. There will be a riot in the Discord, don't you dare. Hey, I think there's going to be more people happy because of the red mic, I feel. Milan, man, come on. I mean, there's going to be more buying opportunities for all of us. We're going to be able to dollar cost average. All I'm going to say is over the next 3 months, save as much as you can to get ready for those deals in 2026. So that's all I'm going to say. Save money, save cash, get ready, get prepared for what 2026 has in store for us. And again, I'm just kind of, I'm not one for making predictions. A lot of you guys have been watching this channel for a long time, 5 years, 7 years. I would never make a prediction. But 2026 definitely gives me one of those feelings where we could see some selling pressure because AI is going to be in full swing. I think with artificial intelligence, there is a possibility that unemployment starts to rise, as we've already started to see. I mean, unemployed persons is sitting at a 4-year high. So is unemployment rate sitting at a 4-year high at over 4.3%. So there's a lot to look into. Okay, NEO and China stocks. Let's take a look at thoughts on Grail Incorporated. Let's take a look at that here very quickly. GRAL. Incredible run up from $30, pulling back a little bit pre-market down over 4%, coming up to its resistance right around that $50 mark. And support level, I would say, is roughly around $42.50, $43. NEO, this is the overall analysis. Higher highs and higher lows, so very nice consistent uptrend. Support level is going to stay put at 650. So this right here is going to be that level to watch inside the uptrend. And if we do get a breakdown further, next support is going to be all the way down as low as 550 to 560 for NEO moving forward. Okay, let's take a look at Intel. I don't want to miss anybody's stock. And guys, if I do, I do apologize. I'm going to try to cover as many as possible. But market's also going to open in about 9 minutes here. So we'll get back into it very shortly. So Intel, U.S. government taking ownership, NVIDIA starting to partner up with Intel, obviously with a huge gap up, rolling over a little bit, and then starting to push right back up. Next target and resistance at $34 to $35 for Intel. And it looks very, very strong. I mean, on a weekly time frame, we're just about getting started here, and I could easily see Intel at $36, $37, in the future. So that is where that next resistance is going to be, starting to break out from this area of consolidation after a long time, and that would be that next resistance around $36, $37. Okay, let's take a look at Oscar and SoFi. Oscar is going to be over here. We got a huge resistance around $22. A very nice consistent uptrend, but then of course starting to roll over once again with a little bit more dilution and stock warrants. Support level is going to stay up right about here at this higher low. And if you do get a breakdown, next support is going to be down at $16.50, just under $17. And I would be looking at accumulating a little bit more around $16.50 to $17 for Oscar. SoFi also rolling over 3.5% after, ripping higher day after day, week after week, month after month. This stock is up from its April lows, 864. It's up 250%. So absolutely incredible, right? And this is very nice, higher highs, higher lows, nice little uptrend for SoFi. Continues to push higher. Right now coming down to that support around that 27.50. And there's going to be another support all the way down right about here, around $24, $25 for SoFi. We've seen a lot of resistance here, as well as a support for SoFi in and around those levels. Yeah, Joe says, good to hold some cash with my Fidelity money market getting around 4%, although those rates are going to start to come down for sure, given that Federal Reserve is also cutting rates. Realty Income Corp, on the other hand, we've got a resistance coming up to as much as 61.50. This has been a very nice recovery from Realty Income Corporation. It was at one point trading all the way down to as low as $49. It's down quite aggressively from its all-time highs, down 20%. This has been a very, very nice volatile recovery as well. It's been incredibly volatile of a stock, but of course one of the best dividend aristocrats, pays dividends every month, 5.3% yield, and this is the overall higher highs and higher lows is what we're seeing for Realty Income Corp. Resistance all the way up to as much as $60, $61. What's the higher high, higher low indicator you're using on the chart? I mean, that is essentially my own chart. Like, this is what I'm drawing in the trend lines to better understand what the overall trend looks like. But we are working with a lot of custom scripts, and we were also going to be launching our swing trading indicator very soon, which is also very, very precise. I mean, it's been incredibly good, as well as the technical analysis, identifying support resistance levels. So we're going to really make it very easy for all of our members to do technical analysis and to better understand swing trading setups because of the custom scripts that we're going to be building for everyone. So we're going to make that available, going to add them to the chart, and you can essentially identify support resistance levels as well as the overall trend and, of course, the swing trading setups for those stocks. Jeremy, do you think 2026 will be more like 2022 or 2018 as far as market behavior? I would say like neither of those two, because 2022 had 2018 had the China-US trade war, Q4 sell-off that said it was kind of isolated to the last quarter of 2018, and the markets recovered in 2019. 2022, it was an entire year worth of sell-off on the back of interest rate hikes. And of course, higher inflation. But I do think that, with the possibilities of a recession, again, nobody can really predict when the recession will happen, and that's really not what I want to do. But I could see unemployment starting to increase, because I do believe that with the rise of artificial intelligence, there is a possibility that unemployment is higher while economic growth is also higher for a short to midterm basis. But then eventually it leads to economic contraction as well, because if people start to get displaced from their jobs, then there is little to no spending, unless of course we take on more debt and we finance our lifestyle through more buy now pay later services, which eventually does not lead to very good outcomes. So it really comes down to, of course, how much AI is going to affect the labor market and how many jobs basically are going to be lost with the rise of artificial intelligence. There's been many studies that is showing that AI is going to, of course, replace a lot of job functions, a lot of tasks. But then, of course, you also have companies that are starting off with these layoffs, and as a result, we're seeing unemployed persons also increase to a 4-year high, unemployment rate also pushing higher. So there's a lot there. And you talked about a glass manufacturing company. May I know what is the name? So it's called Technoglass. It's called TGLS. It's been part of the watch list and the shopping list for a long time. It hit a new all-time high back in June, $90, starting to roll over a little bit. That's why it's actually on the potential for swing trade ideas here, given that it's selling off. So I did share swing trading ideas on Technoglass, on Chipotle, and then just one more company. Adobe, I think, is also what I shared a swing trading idea on. All right, everyone. So market's about to open. Brace yourselves for a relatively, reasonable pullback. 0.5% on the S&P. QQQ is down about 60 basis points right now. We've got Tesla down over 1.8% and Nvidia down over 1.2%. Not to mention, of course, a lot of other names are down substantially. We got Oklo down 15%, Esbet 7%, Rigetti Computing down 7%, Iron's down 6%, BMNR is down 5%, Nebius is down 4%, DLO is down 3%, Oscar's down 3%, Roblox is down 2.5%, Grab is down 2.4%, CoreWeave is down 2.5%, and yes, there is a lot of bloodbath in this market right now, pre-market. Starting with the worst, of course, we got Ethereum, crypto. Those are the main ones. But then Palantir is down 2.3, AMD is down 2.3, SoFi is down 2.6, Hood is down almost 3, Oscar's down over 3, Tesla is down 1.7, we covered earlier. Amazon's been selling off, so I guess it's kind of starting to come down to a reasonable support. So Amazon here. 219 is the support level to watch, so essentially flat right now. So robotics, absolutely. I think robotics is incredible. Some of the themes that I've already talked about on the channel before that I'm very confident on: semiconductors, cybersecurity, artificial intelligence, autonomous driving, robotics. Those are the 5 that I would put down as, like the best of the best over the next 10 years that are going to do massive work. Cloud computing, cloud services, fintech, which is where SoFi comes in. So a lot of these are, you definitely want to be, in my opinion, in these for the next several years, because those are the ones that are going to be the compounders of the next decade, in my view. They've already been. A lot of these stocks have already compounded like thousands of percents, right? But I feel like we're just getting started. And yes, there is that debate that we're in a potentially bubble or something, but I don't think that we're with an AI bubble or anything like that. Yes, the premium valuations are there. We are trading at a pretty expensive levels, but I don't think that this is a quote-unquote bubble. A lot of individual stocks, although trading at insane numbers for sure. All right, markets are open. We are open for business here, everybody. We got the market selling off. Let's see if there's any buyers that start to step in. Volatility, keep a close eye on this. Up over 6% right now, trading back up to over 17. And we are good to go. Ethereum now under $4,000 per coin. And Bitcoin also sitting at just a little bit under 112,000 at the moment. What are we thinking? Are we going to be down over 1% for S&P? Let's see, minus 1%, 0. No, we'll do more than 1% down, between 0% and minus 1%. And then we'll do end positive 0. No, between 0 and plus 1% or more than 1% up. All right, let's do this. Let's see this poll here. What do you think the S&P 500 is going to be closing in today? More than 1% down, between 0 and negative 1%, between 0 and positive 1%, or more than 1% higher on the day. Are we going to see any buyers to step in? Right now, the S&P is down about 0.5%, and of course, a lot of individual stocks continue to sell off further. If you take a look at liquidation, right now we are sitting at $392 billion worth of liquidation already. And this is what the market snapshot looks like. Of course, there's a lot of red on the screen, and there's only 3 sectors that are pushing higher. I mean, there's barely only 2. Energy is flat, but everything else is down quite a bit, with, of course, big tech getting the brunt of that pain. So yeah, definitely participate in the poll. Let us know what you're thinking about this market right now. Are we going to see a more than 1% sell-off in the S&P 500? Because the last 2 days, we haven't really seen a 1% sell-off. The S&P was down 0.5%, another 28 basis points. So yes, from all-time highs, we are down over 1.5% officially, but we're not down 1% in the last 3 days. Any of those days, we're not down. 46%, maybe close it out. Yeah, 48% right now, but more than 1% down and 40%. So I guess 88% do expect the markets to close red today. And we've got some very, very optimistic bulls. Do we have Tom Lee in the house? 4% expecting the markets to be actually up by more than 1% today for the S&P 500. So Tom Lee, is that you? But no, that's crazy. 88% expecting the markets to be lower, and 42% expecting it to be down more than 1%. I guess it depends very much on big tech, because that's really what's going to be driving the market. It always does. Because of the concentration. The concentration is insane for a lot of these stocks here. Tesla struggling, down over 3%, back down to under 430. And volatility here stays elevated at over 17 right now. All right, everyone. So that's going to be it for today. Thank you so much for joining in. Again, link's going to be down below if you're interested in joining our MoneyVest Discord, our community. There is an additional 30% annual discount available until the end of this month. So there's 5 more days left if you are interested in joining. And I do want to mention the full bundle with lifetime access. There's currently a 50% discount on this as well. And you get access to over 200 plus videos, fundamental analysis, technical analysis, options portfolio, options trading, stocks and personal finance, psychology of investing. All of that is going to be available. So there's a lifetime access with a 50% off also available for 5 more days. So thank you so much for joining. I'll see you guys in our Discord. I'm going to send over some updates and alerts there. And again, I'm going to end the poll here with 51%. A little over half of you expecting the markets to close red, but between 0 and negative 1%. Have a great Thursday. We'll see you all in the next